just chatting backstage. I gave him an exit ramp, if you will, if he didn't want to talk about Disney and inflation, because he already talked about it on Finance Junkies, but he's doubling down and he wants to teach us a little bit about how to actually read what he's seeing and give some people some insight as to why. I recognized when you guys were chatting about it, it was a lot of just back and forth about the macroeconomic environment that's kind of going on within Disney and the stream cutting, and but you guys didn't really get too in depth with the numbers. You talked a little bit about Hotstar and India and stuff like that, but there's a lot of good information in the actual presentation, and so I don't know how much you want to dive into that. And also the dividend piece. Did they announce like the official dollar amount that they're giving back?
No, not yet. Not yet.
Okay.
They're going to figure that out once they get the cash flow to, like to understand what the cash flow is going to be. Then they can say, you know what, let's do this with our cash. One of the things that I've been monitoring all throughout the day today is just, I wanted to see if people actually understood Disney and its numbers. And what's funny is there's so many people that are jaded by the politics of it that they're not even trying to look beyond the surface level. And it's kind of sad because if you were to just take 2 minutes and understand what the numbers really are, you wouldn't go crazy. So I'll give you a good example of, I'm just going to share my screen real quick.
Yeah.
So let's do
I'm curious because like I think it's an okay value. I actually own 50 odd shares. It's not a lot, but I'm curious what you're seeing in terms of the crazy growth, because I'm sitting here having had the shares back a year or two ago when they were trading at 190, 200 bucks. And I'm sitting here being like, I should have freaking sold. What am I doing?
Yeah. Well, you'll be pleasantly surprised if you end up holding long term. I just want to show you guys, like, you see this guy right here, by the way, Wasteland Capital. Do not believe this guy. Like, this guy comes up with like really weird stuff, but he doesn't really go into things. And he's the one that was saying that Meta had dilution problems and stuff when it was at $80. So like, you really have to understand. Yeah.
The last thing I was caring about with Meta, I was caring about like the amount of capital they were spending a year. Like they were printing money. Why the hell?
And this is the problem. Like, look at this guy, right? He has almost 93,000 subscribers. Okay. But when you looked at his like meta analysis, hold on, let me just pull it up real quick. And this was such a bad take. Even I was like floored by it. I was like, clearly you have no idea what you're talking about. And it was just like, man. And so fuck it, man. I don't really care.
Maybe he deleted it.
He might have, but
let's see. Probably not.
Let me go back. No, this is why his handle is different from his name. And then Meta. He did this really big breakdown in October. Look at this, RIP Facebook, right? Like, he laid this on and people were just like eating it up, thinking, oh my God, like this guy is so smart. He knows exactly what's going on. And so he expected everything, just like I said, garbage analysis. And so one of the things you really have to do when you're investing is turn the Twitter noise off, because for every one guy that actually knows what the hell they're talking about on Twitter, there's probably like 10 to 15 people that absolutely know nothing about a company and how they actually operate. So, one of the things I saw today, and what's funny is these are actually like bigger accounts that are posting stuff. And it ends up being really weird situation. But then when you look at the real numbers, it's like, wait a second, that's not what this guy is saying. And so let me just highlight something that I just saw not too long ago. And I wanted to respond to it, but I'm getting tired of trying to respond to people on Twitter, right? Because it's just a headache. All right, to try to respond to everyone. So like this chart right here, Disney DTC subscribers, it looks like Disney's numbers are going down, right? And they are going down, but I'll explain, because there's so much nuance to things when you're doing due diligence. Damn, man, where's this guy? I think,
and that's one thing that like I never looked into. For example, Verizon, when Disney Plus first came out, I was still living in Trinidad at the time, and I had a Verizon phone. Verizon reached out to me and said, hey, we're giving like, I don't know what it was, 70, 75% off Disney Plus or whatever. So there was all these partnerships that Disney's kind of creating. So it's like, you're getting, let's just say, a bunch of people through the door. Some of them are going to stop, but some of them are going
Yeah.
to stay. So you're always going to go through, peaks and troughs, especially
Yeah.
once you get to that final growth stage.
All right. I can't find the guy, but he basically put this huge number. He compared it to Netflix, saying, look, Disney is losing all sorts of subscribers, right? And this means that Disney is an obvious sell and that we should all sell it off. Now, when you actually look at the numbers, now a lot of times
Oh yeah, the investor report had a really good graphic.
yeah. And it's not just the presentation that I want to look at, but with the supplemental information that comes along with it. Right here, this one for the direct to consumer business, which is the main argument that's being made
it's
about
an
Disney
Excel
losing
workbook.
losing subscribers. So I'm gonna have to share like my actual screen. Share window. And I'll share this one. Okay.
But I'm surprised like that.
Yeah.
I'm just going to be blunt while you're kind of pulling this up.
Mhm.
The thing that I was surprised about a little bit was how close they actually are to break even on Disney Plus. And the reason being is I think initially when Iger rolled it out in 2019, 2020, they were anticipating it wasn't going to be until about 2025 timeframe before they were really going to start to break even.
Yeah.
So the fact that they're getting relatively close is pretty impressive.
Sorry, I'm just having trouble doing all the opening and closing of the stupid thing.
No, you're good.
Okay, one more time, and hopefully we can break this down because this is what proper due diligence actually looks like, and this is the part that sucks. It really does suck to do it, but it works. So, can you see my Excel spreadsheet real quick?
You might need to zoom in.
Okay,
a little bit.
So I'll zoom in and I'll just show you the numbers. Okay, so this right here is the Walt Disney Company total subscribers for DTC.
Oh, they give it since day one. That's dope.
Oh yeah. So there's great information on what it is. So as a domestic paid subscribers, you can see here, this is how many. So this is like the United States and Canada. Okay. So yes, they did lose about 300,000 subscribers in the United States, right? It's natural churn. When you start raising prices, people are not going to subscribe. Internationally, they went from 1.5 million in 2019 to 59.7. So for everyone that they lost here, they made up for way more on their international side. The problem that they ran into is that they paid for something called the IPL, which is like our version of like the NFL. India cricket, everyone loves cricket. So people subscribe to India, and the way that they did was the thing called Disney Hotstar, because that's what the recognized brand is over there. So you can see here that they launched that in June of 27, and they gained a shit ton of subscribers very quickly.
And they gave it away for like basically free. Like Hotstar was fucking dirt poor.
Yeah. And that's the problem, right? So if you see here in October 2022, right, the number of subscribers on Disney Hotstar in India was 61 million accounts. Now it's down to 40 million. So they lost 20 million subscribers in India, right? But here's the thing: when all these guys are presenting their total number count on an annualized basis, like in their charts, they're like, oh, look, Disney lost 20 million subscribers. That means they're going broke. And I'm like, wait a second. Do you realize why they lost those subscribers? I'll tell you why right here. Because Disney was paying for the content licensing for this cricket league that was in the billions and barely making per subscriber 50. Look at this, 57 cents.
57 cents. Yep.
Isn't that crazy? And this is per. I was like, what the hell is going on? Per month, they're making 59 cents per person. What does that translate to on a monthly basis? If you think about it, it's just let's just do a rough calculation how much it would cost them. Do you see a calculator on the screen? Because I don't know if you can see that.
Not yet. No.
Okay, so I'll just do the math real quick. So it's 0.59, 59 cents per user. Multiply that by 20 million, right? That ends up being around $11.8 million. Multiply that out by 12. That ends up being about 130, $140 million. Those IPL rights were in the billions. So it made no sense to give this product away for such a dirt cheap price. you
Yeah.
know. So that's what Bob Iger said. Look, we are no longer going to have a strategy that's revolving around unprofitably giving away a product that people really do like, and it's still growing no matter how we churn it. We're actually going to be more profitable. So that's why you saw today the
And
price
and
rises.
the more
Yeah.
important thing about India is their per cap, like their GDP per capita, is growing at such an expansive rate that it's probably just prudent to get as many people in India hooked on Disney Plus or Hotstar as you can. Because if
Hmm.
you're going to be able to keep up with inflation anywhere, because the GDP per capita is expanding so rapidly in India, you're going to be able to raise prices like hotcakes over there, and your content is already paid for, right? I mean, like you've
Hmm.
said, the IP is just been churned since the 30s, so it's like
Hmm.
you're sitting on literally 90 years worth of IP. Marvel, Star
Yeah.
Wars, and yes, you can have some Bollywood sort of stuff that you throw in there if
Yeah.
you really want to, but I don't even think you need to. Um, but that's the thing that always kind of like intrigued me, was how cheap they were selling Hotstar, and I
Yeah.
didn't understand the IPL piece, which is interesting. And
Yeah, so a majority of the reason why people signed up was because of that IPL deal that Disney had. But like I said, unprofitable growth is going to eventually stop, and you're going to end up getting so far punished that it makes no sense whatsoever to keep up with it. So let's go over the earnings now, the report that they actually had, and we could go over it from start to finish a little bit. Let me do earnings presentation,
yeah,
and
I
I
mean, I
have
want to
to
make
do
sure
another.
we go over slide 7
Yeah,
because that talks a little bit about what you were talking about.
yeah. Let me go back to this, share screen, earnings presentation, Q3. Okay, perfect. All right, so you can see my screen right here, right?
Yep.
So Disney has two core businesses, really. You have your media, and then you have your parks division, right? So basically your media and entertainment. So this is going to be linear network. So this is like cable TV, linear network. So if you get a
2022 is on the left, 2023 is on the right.
right. So if you get cable TV, Disney is getting a piece of that because they have all the channels that are on there, right? ESPN, so on and so forth, like ABC, because they own those channels. So the broadcasting, and this is by the way on a per quarter basis, okay? So on a quarterly basis, they generate $7.2 billion in revenue from linear networks. This is like the cable TVs and stuff. They generate 5.1 billion in DTC, which is their what is that thing called? Their Disney Plus, their Hulu Plus, and their ESPN Plus um, direct to consumer divisions. Okay, so you can see here linear is going down because people are cutting their cable. There's people are realizing they don't need to have cable. They want to actually have like just a few brands that they watch, like the YouTube. They want to have some Disney content. They have HBO content and Netflix. So you're starting to see a slow winding move downward. The problem that you're running into is this is actually one of Disney's biggest money makers. So last year, they generated almost $2.5 billion in operating income from linear TV, right? So that's a significant amount. If you annualize it out, that's almost $10 billion of operating cash flow that they got from the cable TV division, which is nuts to try to. And that segment is on the slow decline. So what you're seeing now is instead you're seeing a pickup in direct to consumer. So this whole transition is actually one of the reasons why Disney's actually operating metrics have not been as good. So if you see here, there is actually still some growth in direct to consumer, but in an operating loss side, this is where the biggest improvements are happening right now. So if you look at right here, last year they lost $1.1 billion in direct to consumer, right? So if you create content, that's going to cost something, and then when you send it to direct to consumer, if it's not monetized, it's going to actually, if you create it for more than you end up getting it back, it's going to end up costing you money. So last year they lost $1.1 billion in that segment. This year they only lost 0.5. The reason why is because the price per subscription is so cheap that Disney was taking a loss. But what Disney got in return was a lot of people subscribing. Just like how you described the whole thing with Verizon, where you got a deal from Verizon for an entire year. That's not a sustainable business practice. This is to get people into the ecosystem. And now what Disney is
It's
doing
to
is
gain market
slowly
share.
charting.
Yeah.
Yeah. And
It's to
now
fast pace
there's
yourself for the long term.
exactly. And now you can see here that they're actually improving their quarterly income by reducing down, well, by increasing prices, but at the same time also reducing expenses. So you can see here, like last quarter, they spent 4 actually let's go back 3 quarters. They spent Q1, they spent $4.2 billion to create content. Then the next one is 4.1, and now only 4, right? So you see that trajectory going down. Another thing is SG&A. SG&A, they spent 1.2 billion in Q1, then 1 billion, and this one they increased by a little bit here and there. Other operating expenses, probably like content delivery, is all probably the same. So what you're seeing right here is that there's a slow movement towards profitability. And eventually the profitability will come, because when you get more users and those users pay more money, you of course end up benefiting, because now you're going to be able to generate operational cash flow. So let's take a look here. So you can see here that subscriber wise, they're pretty flat, but that's with increases in ARPU. So average revenue per user is starting to climb up, right? So this quarter, they generated $7.31 per month.
Year over year, it's up $1
right,
per month,
which is great. And if you look at the current pricing of how much Disney is charging, it's up 27%. Right. So next year, if they're able to maintain the same amount of subscribers, but also increase the ARPU like 27%, that is a huge boost to revenue. And operating costs are still going to be pretty flat, because what happens with content is that whether you make one TV show and it's shown to 1 million people, or it's shown to 100 million people, it's still going to cost the same exact amount. So this is where future cash flows are going to be coming from this segment. And this is something that's highlighted. Another thing is Hulu. There's some business dealings that I'll have to talk about when it comes to Hulu, maybe towards the end of this, because Hulu is a very interesting division for Disney. Disney does not own.
I was gonna ask you.
Yeah.
I was gonna ask, and maybe if you say hold off, I will.
Yeah.
They own 60% of Hulu. So my question is Disney the operator of Hulu, or is Hulu kind of standalone? Okay, because that's my question is, because when we kind of look at things from an oil and gas perspective, there's always a person that's operating the facility. So it might be Shell, or it might be Chevron, it might be UDOC. And that person's kind of the one that's like doing the operational stuff day to day. And then they just financially pay out the partners. And so that was going to be my question is like, since Disney owns 60%.
Yeah, so Disney owns 60% and Comcast owns the other 30%. Like I think that Disney owns 60 something percent and Comcast owns, but basically Comcast is still a partner in Hulu. Eventually in 2024, Comcast is going to be sunsetted out, and Disney is going to have the option to buy Hulu for a certain price. That is the part that's actually a little weird right now, because the way that the deal is structured is that Disney can buy out what is that thing called? Buy out Comcast, but the price depends on the valuation of Hulu, right? So as if let's say Disney invested in Hulu and made it international, like everyone internationally is using Hulu, right? The value of Hulu would be much higher, and Disney would have to pay a significant more amount of money to Comcast to get them out of their hair. But what if Disney did not invest in Hulu that much and kept it very local and didn't let the subscriber count grow too far? Do you think Disney would what's the word, hobble themselves just to make sure that they're not going to be screwed over in the future? I think they would. That's what they're doing right now. Disney Hulu was supposed to launch internationally in 2021. They didn't do it. They said, what? They slow walk the whole thing. And now that 2024 is coming, right? And Comcast is now left, standing. Disney's saying, well, here's the current valuation. Here's $9 billion. Now get the fuck out. Now we own all of Hulu, and we're gonna put it and market it internationally, because Hulu is actually one of the crown jewels of adult entertainment that that can be monetized very heavily. But for now, Disney is keeping that current division under control so that they don't have to overpay Comcast to break up for it. So imagine right now, like I'll speak in your context. Imagine right now you have a joint deal on an oil rig, right? Where you own 60%, you're the operator, you've got a partner who's got a 30% interest, but there is a fixed date at which that person can get bought out. You're not going to invest additional capital in trying to get more out of that well, because you know that the date is coming right around the corner, right? Where that person is going to be able to buy, what do you call it? It's going to cost you more money to buy that partner out if you end up drilling more. So what are you going to do? You're going to basically slow walk the deal. Comcast is going to have to take the 9 billion and get out the way, and Disney will own the entire part of Hulu, that whole thing, and then be able to market it around the world.
That's my question though, is why would Comcast take that 9 billion? Why wouldn't they try to continue? Because Comcast, I don't think, I mean, they have,
so it's a call option.
Own.
It's a call option. So basically Comcast can't even refuse it. So the deal is structured in a way that Disney can force the sale, and also Comcast can force the sale. But Comcast has a floor price of 9 billion. So it says at a minimum, Comcast will get 9 billion. But Disney only has a call option, but the call option doesn't have a strike price. It just says at any given time after 2024, Disney can just say, "Hey, I want you out of I want you out of my business."
Okay. I didn't know that. I knew there was something. I just didn't know it was coming up this soon. I thought it was like later half of the decade.
Yeah, no, 2024. So January 1st, 2024, this exchange is going to happen. So Disney will probably end up paying the 9 billion and calling it a day. The other thing is, from what I've read, Comcast has not been paying their part of Hulu's expenses, because what they're saying is, well, look, we don't really give a shit. Why are we going to spend money to make something better? In which case, then Disney's going to screw us over later on. Instead, we're just going to chill. And at the end of the valuation period, when the valuation comes, they can just charge us against it, saying, "Oh, well, you didn't pay X, Y, and Z over the last X this many years. Use that against what Comcast is owed." Right? So
or they could sue and settle for less or something like that, and their rate of return is going to be better anyway.
Yeah. So right now, Comcast is focused more on developing their Peacock asset, right? Because Peacock is their domestic.
Peacock's pretty dope. They got some good stuff over there.
Yeah. So Comcast is on the Peacock side. They're investing in making Peacock better. They're like, we're not going to make Hulu better just so that Disney comes in and buys us out, and then we end up losing. Like, what's the point, right? So it's like, whenever you're doing JV partnerships, this is like one of the things that kind of sucks a little bit, because you're kind of like, you're always trying to get the other guy out because you technically want the value to come to you. What's also good is that Hulu can now be bundled with Disney. And that's what Disney is doing now. What they're saying, look, if you buy the package individually, like a Disney Plus subscription, it's going to cost you X amount. But if you also get Hulu, you're going to get a discount. And then on top of it, they can say, hey, listen, if you get ESPN, we'll give you even bigger discounts. So this way, what happens is your bundle ends up creating better opportunities to get more subscribers that are subscribed to all three products. So this way, you'll have Disney, you'll have this, and you'll have ESPN, which means the entire family of television things will all be going to Disney. So the ARPU, from what I can calculate, will go from from what it is, like $7 to probably end up being almost like $25 to $30 when you combine all three of these. And so it is still going to be value accretive to Disney, because they're going to be able to get more subscribers. But more importantly, they're going to be able to increase their subscriber base for Hulu and ESPN. ESPN is like a moneymaker, but we'll go into that a little bit in the future. This is actually the more important thing, because internationally, Hulu's actually going to probably end up doing very well for Disney.
What I don't think people
Yeah.
realize is like, so say you pay $100 a month to Comcast for your typical bill, right? A
Hmm.
portion of that goes to ESPN, ABC, very similar to kind of what you're seeing on the screen here. Now,
Yep.
instead of having to basically utilize Comcast, who then has to pay Disney for those viewers, they're basically eliminating. I'm not just talking about Hulu, by the way. I'm talking about
Mhm.
like AT&T, Comcast,
Yep.
anybody that's providing your cable network. So instead of them getting $5 a viewer from ESPN because you're viewing it through the cable, now they're able to charge $5 a month directly from Disney. So eventually it'll
Right.
go from $5 to $6 to $7. And so it
Yep.
gives them the leverage and not have to worry about the middleman. Everyone's talking
Yep.
about cutting the cord. And I think it kind of backfired on everybody a bit because now you're just dealing directly with who's creating the content. Um,
Yep.
so anyway, just a thought for people that thought cutting the cord was a
Yeah.
brilliant idea.
And what's also interesting is that no matter what, eventually this will level off, right? The linear networks business, it's not going away. It's just slowing down, right? So even from an operating income perspective, like I went when I was in my hotel room in Mexico, you know, they didn't have Disney Plus on there. They had TV, with all the channels and stuff. So what happens, and this is something I realize, is the market for this is huge. It's like the entire planet, right?
Mhm,
When it comes to DTC, the entry point is just a broadband connection, whereas
mhm,
before you needed to have actual copper lines going
mhm.
to the physical location. So if you think about it, from a total addressable market perspective, you're getting much more total addressable market for a DTC product, right? So right now you'll go to India. India's got 5G networks rolling out everywhere. They got high speed everywhere. Same thing with some parts of the world that were connected to the internet, but very slow rates. Everyone is getting high speed internet. And because they're getting high speed internet, they're going to want to watch things. Now, one of the things that they're going to be able to do is now subscribe directly to Disney without having to go through a middleman of a TV service provider and all this other stuff, right? So this and they could do it at a price point that actually works for
I guess my
the
question
local
is, Chris,
users.
sorry to cut you
Mhm.
off. I think
Yeah, yeah.
one of the things that I question, which I don't know, I didn't dive deep enough into the numbers, but maybe you
Mhm.
have.
Yeah.
What is the gross margin difference between what they get from like I said, it was kind of in the beginning. It's like the what's the gross margin difference between um the I guess actual cable networks now
Mhm.
versus the direct to consumer, and is it a better percentage?
Well, you can see it right here, right? So
Yeah.
this one is 7.2. They got 2.5 in operating income. This one they did 5.1 and they only got 1.1 that's negative 1.1. So you can see here for DTC it's negative operating margins, but that's the key, right? As you increase prices and you decrease your operating costs, it ends up benefiting you
Hmm.
significantly. Like I expect this number right here, this 5.1, it's going to grow significantly to probably like 7, 8, 9, and in the future probably 10 to 15 billion dollars a quarter, right?
Hmm.
And the thing is their operating expenses will probably level, they'll rise too, but they'll be
Yeah.
at a much easier pace. And so you're going to see that. So that's exactly what happened to Netflix, where Netflix started off and they were unprofitable. I still remember the days where everyone's like, this thing is not going to work. But as time goes on, people learn, people get used to the pricing, and people subscribe to these things. And eventually it becomes a bigger part of the business. The next thing is Disney actually is introducing ad supported tiers to the mix, which actually have higher ARPU rates too. Because what happens is they realize that not everyone is going to want to spend that extra cash. So instead, some people are okay with watching a couple of ads here and there. What's really good about Disney is that Disney, because of how they have it with DTC, they actually know the consumer very well, who's watching. You have your own profile on Disney Plus, whatever, so you can do much better targeted advertising to
Mm,
that specific consumer. And so targeted advertising is much much higher revenue than doing like a broadcast where you're during a intermission or like a commercial break, you're just doing like a tampon commercial, right?
That's just
But
data
yeah,
analytics at its finest, right? It's like if somebody's
yep,
watching Formula One or they're watching a lot of baseball 30 for 30 content or,
mm-hmm,
any of these sort of things, it shows up on their profile because the analytics are already there to suggest
yep,
things for you. Then you just
yep,
have the advertisements in the background focusing on sports or
yep.
athletic gear or yeah,
Mm-hmm.
that's interesting.
And that's what businesses do. They create something called an identity graph, so they know who you are, and they base their advertising to you specifically. Facebook does that like there's no tomorrow. Like Meta is like the king of figuring out who you are and advertising to you, right? And they've got 3 billion captive eyeballs at any given time via their social media platform. That's why they make so much money.
Mm.
Disney, on the other hand, is going to get something very similar, and so the ARPU over time, which is the average revenue per user, because of the advertising, will end up coming up higher and higher. So that's one part of their business. And this is the part that was actually a weakness directly related to the cord cutting and the shift to DTC. The thing is, long term, DTC has a bigger potential to get way bigger than this revenue number right here. Because, like I said, with the DTC model, all you really need is an internet connection. And there you go. Now you can watch all the stuff you want on Disney, Hulu, and even ESPN now, right? Whereas before you actually needed to have like a physical connection. So the what's the word? The ease of getting onto this is much easier than going the traditional cable route. Not to mention the traditional cable route, the prices usually start at a very high bar, whereas this one is a much lower bar. So if you could get Disney Plus, uh, Hulu, and ESPN, right, for let's say a reasonable price, that's really good, because now for the kids you got Disney Plus and Disney stuff with some adult content here and there. Hulu, you've got mostly adult stuff that you're good to go, and you can watch your favorite TV shows and whatnot. And then you have your sports being covered by ESPN. So you pretty much have the family bundle there, and you're ready it's something that's a much better value proposition. So on an ARPU
How do you
basis,
feel about
yeah.
them buying out the Barstool Sports book? Did you see that?
uh well, Disney didn't do anything other than just license the name ESPN plus betting to Penn National. Well, one of the agreements for Penn National was that Disney said, "Look, we can't have Portnoy on the same level with us, because then like there's a lot of scrutiny that goes around with gaming, right?" And Portnoy had a bad reputation,
Yeah.
so that's why they basically gave away Barstool. They said to what's his name, to Portnoy, here's Barstool, take it.
Here's the
You
media
can,
company. Get out of the
right, but
betting
you
part of the business.
right, exactly, you can't, and he has a non-compete, so you can't
Which what
do
a deal, right? He still gets his
yeah.
100 million or whatever, and then he gets his
500,
cup.
well,
Was it
five
five? Well,
hundred million, 500 million was for Barstool itself. I don't know what his ownership stake was,
it was
but
pretty big.
yeah,
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 it was in the hundreds of millions. I think he owned
yeah,
either 30 to 40% of it, so it wasn't a small amount.
yeah, yep. So Barstool is there. Okay, so we're done with this one. This is one of their growth drivers into the future. Yay, everyone is happy. Let's move on to the
I
next
loved
thing.
it though. I'm sure you saw over the past quarter people
Mhm.
taking pictures of the parks, showing them
Yeah.
completely empty. I can't wait till Disney earnings come out because it's going to be awful. And I'm like sitting there, I'm like, maybe they have a point. And I pull up the earnings for the parks revenue. And I'm like, what the hell is everyone talking about?
Yep. And that's what we can move on to next. So number one, when it comes to parks revenue, is there's definitely a decline in the US parks a little bit. Okay. And I can tell you the reason why. Because last year in 2022, you were coming off of a COVID year where there was so much demand, pent up demand to do things, right? And to go places, that people really went kind of crazy with it. That's number one. Number two is there were still a lot of places in the country that were still under lockdown, right?
True.
So what are you going to do then? So right now you're starting to see everything open up. Another thing is, internationally, the parks were closed, right? If you go to China, look at international parks last year. it was closed. You barely, I mean, not just because they have multiple ones. They have a Disney Europe,
Yeah.
they have Disney Shanghai, Disney Hong Kong, Disney Japan. They were still operating with limited capacity because of COVID. So you can see here last year in the international segment, they had only $0.8 billion. I mean, point 0.8 8 so 800 million dollars in revenue from their international parks division, and their operating income at the time was actually negative one, so which negative 100 million. So when you look at this, it's like, wow, this is bad. But on the other hand, when you look at how strong they've come back, because now Shanghai's fully open, Hong Kong's fully open, Japan's fully open, everything's, they generated almost $400 million in profit just from this quarter. By the way, remember, this is all quarterly numbers.
Quarter.
This is not annualized. This is not annual numbers. So if you think about it, they went from negative 100 million per quarter. So if annualize that to which ends up being negative $400 million last year to now $400 million. So multiply that out by 4. You got yourself a 800, not 800, sorry, what is it, 1.6 billion in operating income coming from just their international parks division.
Mhm.
All right. This right here is their domestic parks. So like in the United States. So this year in the United States, they actually generated more revenue than they did last year. So this year they generated 5.6 billion in revenue. Operating income wise, they actually were less because higher inflation means higher prices for the food, for all the stuff that was input costs for labor and stuff. But that's gradually being improved also. So Disney's taking some changes and around the parks to make things a little bit better for not just the consumer, but also from a pricing standpoint. And so those rollouts are happening right now. So that should be a big help.
But to
Yeah.
take a break on that for a second, the gross
Mhm.
margins here are a lot better than you would expect. I
Oh
mean, you're
yeah.
talking about
Oh yeah.
5.6 billion, you're walking away with 1.4. That's close to 25% gross margin. Like,
Yep.
we're not talking about small money here, right? And like you said, you
Yeah.
annualize that out. I mean, we're talking
Yep.
about, and then you look at the actual consumer products, so like the plushies and all that
Yep.
stuff. That's even better. It's over 50%. I mean,
Yep. 50%
what else
gross
can you
margins.
ask for? Like that's
Yeah.
great margins.
Yep. So this is the other thing too, like the consumer products. So even when there's IP that comes out, like when you go to like Disney, you can make lightsabers. When they license out lunch boxes, they license out. These are all high revenue, high margin. I mean, not high margin income that's just coming in where you don't really have to do that much, right? And so you can see here on a per year basis, they generate, what is it? 0.6 times 4 is what?
4,
Uh,
2.4.
2.4 billion in operating income just from selling shit, and licensing content. That's really freaking amazing. So this business is a cash flow machine. It's returning back to its cash flow machine status. And yeah, like, so then they bring up this stuff, which is, all the stuff that they're releasing slowly. But what's very interesting is this right here. Okay. Fiscal year 25, 25, and 26 cruise lines. Prior to COVID, the cruise business, they had a total of, I think, 4 ships. They just introduced a new cruise ship right here, begins in October, going from Australia and New Zealand, right? Which is, I think they called it Disney Wish, or I forgot what the name of the ship was, but that is going to start adding into it. They generated usually free cash flow from that business because it's run separately, about 1.5 billion a year in
Hmm.
just free cash flow that goes to Disney's bottom line, right? That's because they operate as a separate entity. They're adding 3 more ships, these cruise ships, in the next couple of years. Their income from cruising is going to pretty much, in my opinion, go from 1.5 billion to probably like 4 point something billion in just free cash flow from that one specific division, right? And no one's even paying attention to that.
And the nice thing about
So
that is, like, you think about how cost intensive getting these ships out is. Like, look how
yeah,
much debt Carnival and Royal Caribbean and stuff had to go to. They have other businesses, right? It's the power of being an integrated, like, conglomerate of businesses where you have the different chains of command and different departments that you can kind of pull money from. These guys aren't
mhm,
going to have the debt load that a Carnival would have or anything like that. They had the capital to withstand because of the movie business, the the commercial business, or not commercial, the cable businesses. They didn't have to worry about dipping in.
Yep.
Anyway.
Yep. So we can see here, just from a total operating income perspective, it's flat year over year. Net income wise, they lost 134 million. And this is what everyone usually like ends up looking at and getting a little bit like, oh my God, what's going to happen?
It's going to zero,
Eh,
Chris.
It's going to zero. It's going to zero, right? No, that's not how it works. So they had restructuring and impairment charges. So certain IP that they wrote off because of the way that they're doing their accounting next. And also, they're actually restructuring the entire company to be way more capital efficient. So they had to take restructuring charges, and they had to put that on there. But these are non-cash charges. So it's just like balance sheet adjustments rather
It's
than actual.
goodwill or
Yeah.
value the assets. I'm curious, did they go in detail a
Yeah.
lot about, obviously they probably did. Did Bob go into a lot of detail in the conference call about it?
Yes, yeah, they went into some detail about it, but it was more prevalent probably when they released their report on the SEC. They haven't, as far as I know, they haven't released it yet, but I have to take a second look. So, yeah, and so if you add back all the stuff in terms of a cash perspective, 3.5 billion in operating income. Multiply that out by 4, that's almost 12 billion, well, almost 11 billion in operating cash. So if you go to like Alpha Spread, let's just take a look at
14
their
billion, by the way.
operating. Say that again.
It's 14 billion.
It's 14 billion. Yeah. All right.
Let's get which was you what you're getting to. I won't steal your thunder.
Yeah. No, no,
But
no. Right here from operating income, you can see that gradually operating income is coming back to being normal again. So the goal here is to get back to what they historically traded with, which is around 14. Like prior to COVID and prior to the acquisition of Fox, it was close to 14 to 15 billion in operating cash flows. Disney, because of COVID and all the stuff that happened after that, and this the switch from linear to DTC, is taking that transition and it's costing them a little bit. So this is a profitable company. This is not, Disney is not going bankrupt. I know a lot of
no.
people think that Disney's going bankrupt. Disney's nowhere near bankruptcy. Their operating cash flows are positive. They're doing well, and they're going to eventually get to a point where they're returning back to this. So in terms of market cap, you're going to see a huge upward move in market cap once the street actually realizes what's actually happening, And so it's this is, to me, this is one of those things that you just have to do the work and you have to deep dive into it. You can't just read the headlines and be like, oh my God, this company's going to bank, like this whole thing about going woke, going broke. I get it. Some people are not going to like the shows and stuff, but even that is being addressed by Bob Iger. And let me just show, because I think it's worth putting that out there so that people understand it's not going to happen overnight. That's not how you can, what did you call it? That's not how a CEO or companies can operate, where they can just flip a script and just one day make the change happen. Let me just bring it up 1 second. Do you have any question for me in the meantime? Sorry.
No, I was actually just going to pull up because you were kind of showing the previous revenues and operating incomes. I was kind of curious, talking about what you were talking about with respect to the parks in Asia being mostly closed. I was curious if the Shanghai Park and Hong Kong Park, and I don't remember if it's Shanghai or not. I think it might be the Shanghai Park and Hong Kong Park and Tokyo Parks. I was curious what that run rate was on a revenue basis, because obviously we're still opening up, right, and getting things back to normal. So I don't think that they're at full capacity like they were in 2019. So I was actually pulling up a 2019 report to see if they broke it out to kind of give that kind of idea as to what revenues you might be able to anticipate, because once you have that, apply a 25% gross margin, or maybe even better, depending on, because there's obviously some underlying operating costs that are, no matter what, like you saw, even though nobody's there, you're getting a little bit of revenue, you're always going to have some sort of drag on your operating income because you have to keep the park alive, you have to pay for building, upkeep, all that. So it's going to get to the point where that gross margin probably approaches 30% or 35%. And I'm just kind of curious at what point do you kind of get there?
Yeah, I mean, it's going to take a while. I can't say for certain because the transition from DTC, I mean, from linear to DTC is a little rough. It's getting people to change mindsets and also getting them to change how they've normally operated. That's the hard part for to understand, and it's hard to project out. But what I can tell you is that this is like the rock bottom prices. If you value this against Netflix, Disney is the obvious choice. Look at how much operating cash flow Netflix currently makes and how much Disney makes. And yet they have almost the same market cap, which makes no sense, right? So even Bob Iger, like you can see here, Bob Iger addressed this. He's like, look, I'm not interested in being drawn into culture wars. And if you really read into Bob Iger, how he's actually been in the past, a lot of his mantras around executive leadership are focused on the consumer rather than being focused on like ideals and goals and stuff. Let me just pull up the CNBC article. I mean, interview.
While you're doing
where
that,
he
so
actually
Chris
addressed that.
Chris
Yeah.
does have a channel. He mostly focuses on his time doing the live streams. Eventually, maybe he'll get back to a channel. I don't know if you want to talk about that, but Chris has a Patreon, which is in the description, and he does a weekly chat. So if people have like direct questions or want to chat with him and be part of his group, he has multiple tiers to which you can be somebody that has one-on-ones with Chris on a regular basis, or you can just be part of his weekly calls where I'm not invited because I need to sign up for that. By the way, I'm actually kind of curious what you guys chat about.
At Disney, can you hear the screen? Can you hear?
Yeah,
sharing.
Animation. Okay. Is the loss of John Lasseter years ago, for example, been a blow that you haven't been able to recover from?
Well, first of all,
so John Lasseter, by the way, was the head of Pixar. He was one of the instrumental engineers in making sure that Pixar had some high quality stuff. Like if you saw Toy Story, that was John Lasseter. There were so many great movies that came out from Pixar, and it was all because of John Lasseter. After John Lasseter left, the quality of Pixar films kind of dropped off a little bit, but once again, this is one of those things that Disney understands and is willing to fix and work on. So let's keep going with this.
Well, the studio and its movie assets are #1 at the global box office this year so far. That said, we're extremely realistic, and I'm very objective about that business, and there have been some disappointments. We would have liked some of our more recent releases to have performed better. It's reflective not as a problem from a personnel perspective, but I think in our zeal to basically grow our content significantly to serve mostly our streaming offerings, we ended up taxing our people way beyond, in terms of their time and their focus, way beyond where they had been. Marvel's a great example of that. They had not been in the TV business at any significant level. Not only did they increase their movie output, but they ended up making a number of television series. And frankly, it diluted focus and attention. And I think you're seeing that is, I think, more the cause than anything else.
And
agreed, 100%.
I mean, we've talked through the years. There was a time when a Pixar opening was a real event. Did it suffer as a result of during COVID when you were going direct to consumer? For example, I think it was Red or one of the fairly big
there were
movies
there were three Pixar releases in a row that went direct to streaming, in part mostly because of COVID. And I think that may have created an expectation in the audience that they're going to eventually be on streaming, and probably quickly.
And this is another problem, right? Because if you take a movie, you only show it for, let's say, a month or two on the movie theaters, and then you put it on Disney Plus. People have this inbuilt expectation. It's going to be on Disney Plus in about a month anyway. I'll just wait. I don't have to go see it at the movies. I don't have to take my 3 kids and my wife and go see it and turn this into a weekend adventure. They could just, and so that's a lot of money that the studio ends up losing because they get a significant portion of that. So one of the things now that they're flipping the script on is, now that everything is open and people want to go back to the movie theaters, they're going to actually keep movies in the theaters a little bit longer, and also like put a big distance between when it actually ends up on Disney Plus. So this way, if people want to see a movie, they're actually going to have to go see the movie. They can't just wait for it to come on Disney Plus.
So I know there's a little bit more in this. One, it sounds like he's got a little cold or something. Normally he sounds a little bit more uppity, but and a lot more charismatic, but maybe it's that year off that he took. But the thought process that I have with this is very much what Bob was kind of mentioning, is like people were almost overkilled with Marvel. Like I couldn't keep
Mhm.
up. It used to be something where you'd go once every other year to see the big Marvel like joint movies, and then you'd have like once a year or maybe once every 8 or 9 months a bigger movie that had a solo
Mhm.
actor like a Thor and they just
Yeah.
started churning them out, and to the point where and then Star Wars kind of did the same where they were just doing
Yep.
too much. Then they had the Rogue One series, and it was just like
Mhm.
it went to be something where it was like, well, what is this? I don't even know who the hell this character is, right? Like
Yeah.
it was kind of like that.
And
You
the story kept getting diluted, right?
right,
So
right,
if you're focusing on Thanos as the main protagonist, because that's the one thing that I have to like give a little credit to. Everyone thinks great heroes make a good TV show or a movie. It's not. It's
but
a
a
great
villain.
villain.
Yeah,
So it's like Darth Vader is like one of the amazing villains that actually everyone hates, but people love seeing the villain too. Like if you look at like not Star Wars, the Batman series with
yep,
Keith Ledger and the Batman, bro. I mean, Joker, he literally made that movie.
right.
I went
And
to
same
go
thing with
see
the
it.
old Joker
Yeah.
with Jack Nicholson. Like, what's his
Yep.
name? What crap? What I forget the actor's name, but that's what made the movie, not whoever that Batman was. I forget who. I want to
Yeah.
say Keith, but I
So
don't remember.
so right now, who's the main villain of the Marvel universe? And it's like, is it the Marvel guy, like the what do you call it? Something the Conqueror? I don't know, from the Eternals. Is it that guy the main villain, or is it like Kang, the multiverse dimensional guy? Like
Couldn't
there's
tell you.
no real arc that Marvel is in right now, and everyone is just literally pumping shit out just to pump it out. And I think
Yeah.
that's a problem. I think that's a
And
problem.
I
So
like the where you're going. I think I heard you say this. So if I regurgitate it, it's not mine, it's somebody else's, but I agree with 100%. It's like going exactly like you said, direct to ESPN Plus or sorry, Disney Plus, a
mhm.
month after theaters. It's like you could have a transition. Wait until you have a month or two in the box office,
Yeah.
then do hey, let's pay per view if you want to look at it on ESPN Plus and get an extra
Mhm.
little bump, right? Maybe
Yep.
charge 20-25 bucks for 3 or 4 days worth where you could still have a family, of 4 or 5 watches. So you're not paying like 80 bucks to go out to the
Yep.
freaking movies like it costs these days. You're paying 30,
Yep.
35, but now you don't have to cut in the cinema anymore. Because some
Yeah.
people still they don't go to that, right? They kind of got out of that habit with the pandemic. And then
Mhm.
after that dies off and nobody's renting it anymore, then license it out or put it on
Yeah.
Disney Plus.
I think that's flipping though. Like you see the popularity of the Barbie movie, like that's a big thing, right? The Super Mario Brothers movie, that was amazing. The Top Gun came out. So I think people are starting to make their way back to theaters again, saying, look, I'd like watching shit on TV, but I also like going to the movies and watching it on the movie theater screen. So I think that's going to be a thing that starts to come back. And hopefully this is something that Disney can monetize further. But I just want to say, who I'm looking forward to for the villain for Star Wars? Admiral Thrawn. Admiral Thrawn was like one of my favorite villains of all time, and I
Maybe I was
hope they
too
don't
young.
ruin
I need
him.
to. What
It's
episode was
it's
he in?
it's the blue guy. The blue guy. You'd have to watch what is it called? Like
Episode
I forgot
4,
which version.
5.
You'll see Admiral Thrawn. He's part of like the extended universe, but he is really really good. He's like the typical. He's just a really good villain. If anyone here watches Star Wars in the chat, just shout out Admiral Thrawn, man. He's an amazing character, and I hope they do him justice. But let's keep going with this, and we can just keep dissecting it further. All right. All right.
Wasn't an urgency. And then I think there was some, I think you'd have to agree that there was some creative misses as well.
Well, how do you
I
change
look
that?
at,
So you heard that, the creative misses. That's where he can't say we created a lot of shit that people didn't like, but the way that he's gonna put it out, creative misses, right? So this is one of the things that, believe it or not, Iger and team are slowly working on, but they can't exactly be like, we went woke, we went broke, now we're gonna have to flip the script. Like that's not how CEOs talk, but they will throw out innuendo. So that comment right there should clue people into where Disney is where it's headed, because they understand that they made mistakes. The
Yeah,
first
changing the
part
ship
of
direction.
Yeah, the first part of understanding that you have a problem is this part. And so a lot of people, they look at Disney right now and they're looking at it from last year's lens, where even Disney's like, look, we're doing we're going to change. It's just going to take some time. So give us a break and let's keep going with this.
I look at the company is 100 years old. Walt Disney went into the animation business starting with shorts in the 1920s, and obviously his big first feature with Snow White in 1937. If you look at his history, there were peaks and there were valleys. Every valley was followed by a peak, and I studied it very carefully. It's true in my predecessor Michael Eisner's days too. He had great halcyon days of Beauty and the Beast and Little Mermaid and Lion King, and just this tremendous success, and then there's a dip. I'm not suggesting we're necessarily in that, but I'm also not suggesting that we're at a peak either. That we have some work to do there in terms of improving our creative output.
Did the loss of Lasseter, was it a blow to the company over time?
Look, there's a lot of talent at Pixar. There has been turnover as well, not just John, but there's been other turnover too, and that may have had some impact.
But you're confident that the production of Pixar animation, for example, and the Disney studio overall is going to continue to be strong.
Correct.
Marvel and Star Wars, too much. I mean, you almost indicated kind of it's been a little much. Do you pull back in a way?
Yes.
You do.
Yeah.
He didn't even pause.
You got to pause on that shit. Give it 2 to 3 years. They're like, oh shit, a Star Wars movie is coming out. Like I remember when episode 10 came out. Or maybe it was episode 7 when The Force Awakens came out, or no, I forget what it was. But and then it was just like immediately they were going into the next trilogy of episode 10, and then you're like, it was awesome. I was once every other year, I would go home, I'd visit my brother because he was living in Pennsylvania, and I'd be like, we're gonna go see the Star Wars movie. It would always come out around Christmas. It was like clockwork. It was just like you started establishing a tradition. And then it was just like all these damn movies coming out. It was hard to keep up.
And the thing is, those things cost money. You can't keep producing content if people don't want it, And the thing is, now you're also competing against all sorts of other content creators like us. You're watching YouTube, you're not watching, the thing in the past. So one of the things is that the quality of stuff that you put out has to be high quality. You can't just put out bullshit and expect people to go watch it just because it has the Star Wars name behind it, because all you're really doing is diluting the band. Yeah. Releasing less doesn't make up for mediocrity. I agree with you. I agree. But that also doesn't mean that you pump out everything. I think what it is really testing the waters for what works and what doesn't. You can't just like throw darts at a dartboard and hope that it works. I think that's one of the things that Disney will understand, where it's okay to spend extra money on that one big budget movie as long as the character development is good, as long as the director is good. Like it's not just 100% fucking CGI, which is a complaint for a lot of people. So these are the kinds of things, like let's say you want to hire like a level star to be in the movie versus just, the dude off the street. I mean, these are the kinds of things you have to take into consideration. And so I think with Bob Iger, they're working on that. It's not something that's going to happen overnight. And yeah, I mean, let's keep going with that. Let's see.
You pull back not just to focus, but it's also part of our cost containment initiative. Spending less on what we make and making less.
Now, of course, it used to be that some of that stuff would then go to Netflix and you'd make a lot of money from selling it in different distribution channels. Now it all just goes to Disney Plus. Do you ever think about how much money
we shouldn't have done that?
Not that you shouldn't have done it, but that there's still... I mean, the old model worked pretty well.
It's kind of interesting because I think if we did, the old model worked when it was a blend of basically business models. It wasn't the only model. The licensing model was part of a collection of models. I think if we hadn't done it, everyone would be saying, why isn't Disney going to the streaming business? And as it turns out, I think we made the right decision there to go into that business. It will be a growth business for us. We will turn it around. I'm confident of that. It will become profitable, and it will deliver growth for the company. And it will be an important business because that direct-to-consumer model, where you have a relationship with your consumers, which we lacked, frankly, as a company, except in our parks and resorts business, that will be of value to us long-term.
I will say that was probably one of the things I used to. So Iger is one of the people that I listen to because I try to do
Mhm.
better with my public speaking personally. And I would
Yeah.
just say he is normally a little bit more charismatic, but I
Right.
think
Yeah.
that sort of interview didn't warrant a charismatic Iger. It required the straight shooting, sort of cut the bullshit. We
Mhm.
need to get back to business sort of Iger. And
Yeah.
I think he showed up really, really well there.
Yeah.
This isn't just from a financial Disney sort of perspective. This is just from somebody that aspires to be a head or leading groups of people and leading companies sort of person, right? That's how
Mhm.
I want to eventually get to myself.
Yeah.
So it's nice to see a different side of him than I'm used to him being
Yeah.
the Disney showman, right? To an
Yeah.
extent.
I'm gonna show just 2 more videos, and then after that, we can wrap it up a little bit. But this one's important because this addresses the whole culture war conversation that Disney's kind of under from its past, right? So let's watch this.
There was an article in the Wall Street Journal that seemed to indicate that people aren't going to Disney World at the rate that they did certainly a year ago. And your fight with the governor there, or his fight with you. Is he having an impact, do you think, on attendance, his continued criticism of the company?
No, we see no sign of that at all. The article that you referred to was not accurate, actually. It was measuring attendance at Disney World on July 4th, which didn't really factor in temperature, which is about 100 degrees and 99% humidity on that day. But there are other factors as well. One is, and I think this is kind of complicated, but Florida opened up early during COVID, and created huge demand, and didn't have competition because there were a number of other states that were not open yet. So if you look at the numbers in Florida in 2023, or just recently, versus 2022, where not as much was open, and Florida was the only game in town, there's a lot more competition today. So against 2022, the state of Florida has been down. We actually track hotel tax revenue across the state, which is matter of public record. And there are counties in Florida that have been down 6-7% recently. We also know that our competitors are discounting in that state. So there are some near-term issues in Florida that I don't think have anything to do with politics.
And not about pricing either? Because obviously, when it comes to pricing in the parks, you have a great understanding there of what that can do.
One of the things that we addressed as soon as I came back was, whether our pricing was right or not, and whether our pricing reflected value. I should also say, I don't know when the last time you visited Disney World. I say it's where the Disney brand lives in its most sublime form. Right. I still believe that. It's an incredible experience. It's a very, very popular business and product, and it's very successful, and we're not wringing our hands over it. There's some near-term issues in Florida, as we've talked about, but
yeah, well, I want to talk.
And pricing is not an issue. We address some of those issues.
So you're not concerned overall about some sort of a significant decline over time in attendance?
Not at all. No. I think you're looking at a comparison to last year, and it's very, very different. And we do not have long-term concerns about that business.
What about DeSantis, who's going to be on the hustings, so to speak, for the next year? And he's made this a part of his campaign, attacking Disney, saying it's a woke corporation. We've put the company on a pedestal, but they've really embraced the idea of getting the sexualized content in the program line that I'm not willing to cross. I mean, that's what he said. I quoted DeSantis there. How do you respond to that?
Well, so far, what we've said publicly is that we are concerned that he has decided to retaliate against the company for a position the company took on pending legislation in that state. And frankly, the company was within its right, even though I'm not sure it was handled very well, it was within its right to speak up.
You heard that right there? Was handled very well. Basically, he just threw Bob Chapek under the bus. He just said, look, man, that's not who he would not have gone that route. He would have been way more conciliatory, would have had a backdoor meeting, said, hey, Governor, I have pushback from my employees, because that's what happened. The employees were the ones that pushed Chapek to respond. So, Bob Iger is way more nuanced with how it is. So,
on an issue, constitutionally protected right of free speech, and to retaliate against the company in a way that would be harmful to the business was not something that we could sit back and tolerate. And so we have filed a lawsuit to protect our First Amendment rights there and to protect our business, frankly. The other issues that you referenced, look, the last thing that I want for the company is for the company to be drawn into any culture wars. You know, we've operated for, you know, almost 100 years as a company, making product that we actually are proud of in terms of its impact on the world. You know, I joke every once in a while, we're there to manufacture fun.
Well,
you know, we're there to tell great stories.
I know, but you can't be happy when there's literally Nazis standing outside the front gates of the park.
That was horrifying, quite frankly, and it's concerning to me that anyone would encourage a level of intolerance or even hate that, frankly, could even become dangerous action that could be turned into some dangerous act of some sort. So it's concerning to me, but I don't really want to engage in the specifics except to say that it's not our goal to be involved in a culture war. Our goal is to continue to tell wonderful stories and have a positive impact on the world. You know, we are a preeminent entertainer in the world, and we're proud of our track record there. The notion that Disney is in any way sexualizing children, quite frankly, is preposterous and inaccurate.
Well, this is going to keep going on, but you're going to, I mean, do you ever feel like you need to engage in an even more strident way, or you sort of want to stay kind of where you are? The lawsuit will speak for itself.
We're going to keep doing what we do best, and be proud of what we are doing, and be mindful of the environment. Of course, I've said this publicly. You know, we're sensitive to the interests and the needs of the great audiences that we are seeking to attract globally, and we'll continue to do that.
Yeah, very interesting interview, right?
Yeah, I think one of the things that I think he mentioned very well, which I agree with to an extent, is, and you mentioned it, handle those sorts of things behind doors, right? And you don't want to fight in front of the children, right? Where the children are the consumers of the world, the people that are watching on, the fans of Disney, the fans of, say, specific politics makes everything get messy. And so if you have the opportunity to say, hey, let's nip this in the bud. You know, I have no problem with you. You have no problem with me. You know, let's just keep Disney's name out of your mouth, you know, all that sort of stuff. Then you're able to continue on that sort of way and not have any true problems. I have a question for you, though. Do you think that, I mean, I know that Disney was kind of heading down a ruddy period, and that's why they brought Bob back. Do you think that it was an easy call to make to bring Bob back, or do you think he kicked and fought to be able to come back? Because it seemed like it happened like pretty dang quick.
Well, the truth of the matter is, it wasn't actually Bob Iger who was supposed to actually come back. That was not the first choice to come back. The two people that they actually wanted to come back, and let me actually show you the interview with that, because I think that's actually important real quick, is Kevin Meyer, right? And I forgot the guy's name. God damn it. Kevin, I'll just play the video. We can watch it together. Okay. Tom Staggs. Tom Staggs.
Yeah. Well, what I will say, make sure to share your screen again. The thing that people are saying in the chat, or they're talking about, oh, well, that wasn't as good as Toy Story. But you have to think Toy Story was 20 years ago. You have to continue to make that content. So Frozen, my niece, who's 4 years old, that's the only thing she talks about for the past 4 years. And then Kanto, I watched her for 2 days. We probably watched Encanto like 3 times, like in that 2-day period. So it might not be Toy Story, but even if it's 80% or 90% is good, these kids don't know the difference, and they'd much rather watch something like that. They love it. And those Tonys that they have with the little speaker box and stuff. My niece loves that shit. Anyway.
Yep. No, and my niece loves Frozen, man. It's like, bro, Frozen is gonna make them multi-billion dollars. That's a great IP that they have. Hold on.
Joining me now, partner and co-founder of Lightshed Partners, Rich Greenfield. All right, so when we're looking at the answer that Mayer gave versus him going back as a consultant, I think it kind of meshes, right? He's not saying that he's heading back for full employment and he's going to take over Disney.
Look, if Disney wants to spend $10 billion and buy out Kevin Mayer's Candle Media that, Blackstone backed, I am absolutely sure that, as part of an acquisition, Kevin would love to be sort of acquired by the Walt Disney Company. But I think for right now, this is more helping and just he's got a very long relationship with Bob Iger, really throughout Bob Iger's entire career. He was the trusted lieutenant on all things M&A. So when you think about Lucasfilms, Marvel, Pixar, all of the transformative transactions for Disney, including the not so good ones like Fox, Kevin Mayer was obviously integral. And so I don't think it's shocking that Iger turns to Mayer for advice on what to do. He clearly knows he has a problem. I mean, in many ways, Disney right now feels like that Formula One race car where all four wheels are sort of coming off at the same time. They've got a lot of problems. And so I think they're looking strategically for how to fix them.
It's interesting talking about, for instance, ESPN. And you heard Bob Iger really doubling down on the importance of sports to Disney and ESPN and saying, we're not looking to spin it off, we're looking for partners. But in my own reporting, what I've learned is that when they go and they talk partnership, when ESPN is in talks with partnership with, say, sports betting companies, then the corporate office comes in and sort of big boots all of the discussions that were happening at the ESPN level. Now you've got two guys who were pushed out formally, coming back in ostensibly to consult and to give some ideas. How do you think that's going to affect those who are working inside Disney, inside ESPN, and inside the other companies that may feel not that beloved right now?
Well, look, I think, the reality is this is an unprecedented period of time. I mean, NBC Universal reported last week, and its cable network division, obviously the parent company of CNBC, affiliate fees, the fees that are paid by cable and satellite operators are declining. In terms of that, in terms of the fees paid to companies like NBC Universal, the same thing with Disney, same thing with Warner Brothers Discovery and Paramount. Everyone is facing a pretty hostile cord cutting environment where cord cutting is now happening at a faster rate than you can charge more to these companies on a per subscriber basis. And so the bedrock of this industry is in secular decline, meaning the affiliate, the cable and satellite fees paid, which were the bedrock for that last 20 to 30 years of this industry, are in secular decline. On top of that, Contessa, the advertising environment for linear TV is terrible and not being helped by these double Hollywood strikes. Like, this is a very, very difficult period of time.
That may have been part of what Iger was referring to when he said about the writer strike and the actor strike, that people had to have a sense for what the business environment, what the economic environment was. But in the meantime, what sets Disney apart is they're investing, and they don't churn out content in terms of volume the way that Netflix does. And so when their projects hit the box office, it needs to be meaningful. When The Little Mermaid or Elemental or Indiana Jones or This Weekend Haunted Mansion hit the box office, when Barbie has been a stunner, and when Universal's Oppenheimer, again, produced by my parent company, is doing so well, then it makes Disney stand out in contrast. What needs to change? What can Iger do? What can any new/old minds do to sort of turn this big ship around?
Look, it is mind-blowing that the animation king is no longer Disney. Universal owns that crown, Contessa. It's not even debatable. The Disney animation engine is clearly broken.
For now.
And there's no quick fix. I mean, it takes 3 to 4 years to make an animated movie. You look at how Marvel's grown tired and Lucasfilms has grown tired. All the things that drove Disney to epic success in 2017 through 2019, they've just gone too far. They've relied on these franchises a little too much and haven't created fresh, original content. Barbie, a great example of what Warner Brothers just put out in connection with Mattel. There's a real problem, but I want to come back. There is no quick fix. Back when Iger came back, when Iger was appointed CEO the first time, the quick fix was buying Pixar, then going out and buying Lucasfilms and Marvel and totally transforming the company. I don't see a transformative acquisition that fixes the content problem. Sure, you can spin off ESPN or find a partner, or you can try to sell ABC and the cable network.
All right. So that's one guy's opinion, of course.
What I wanted to say, though,
yeah,
sorry, I cut you off, but the thing that Richard Greenfield reminded me of that I wanted to say after one of the Iger videos that you pulled up was the ebbs and flows, right? The pendulum swinging of nothing coming out good from Disney to having 2 to 3 banger years, right? So he mentioned specifically Toy Story and a few other bangers that were kind of in the Lion King, the early to mid 90s sort of things that have come out that was molding my childhood. And then they kind of went quiet for a few years. And then they started coming back with what was I thinking about? The beginning of the Marvel movies. And then they kind of went quiet for a few years. Then a bunch of then they had the Lucasfilm, and then it kind of went quiet for a few years. So it makes sense to you can't be on all the time. You have to re-strategize. And I think it's been evident throughout their course of their history. They're not making a hit every year for the past 100 years, right? There's going to be some down years.
Yeah, and what's also really cool is that their parks asset actually still has a lot of room for additional monetization that people don't really consider to be a thing. They think that they've hit a peak with that, but think about it: like how Disney just can open a new park in another international segment, create, put more cruise ships on the sea, and start generating more meaningful revenue. Right? The IP that they have is a one-time expense, but can be multiplied significantly. And the next video I want to show real quick, and this is the last one before we head out. This is from a former executive of the resorts and their parks division, because I think when you get an idea for their past success, it's really good to like understand from the past person's perspective what they're doing right now. And so this interview was actually really good. Let's watch it and we can talk about it in a minute.
Reports earnings after the bell on Wednesday. Investors will be keeping an eye on the parks and experiences business. There's growing concern about demand amid high inflationary cost pressures, along with the future of the streaming business and plans to take ESPN fully over the top as a direct-to-consumer service. For more on this, we turn to Lee Cockrell. Lee is a former executive vice president of operations for the Walt Disney World Resort, and still with us is Yahoo Finance's Alexandra Canal, which is her wheelhouse as well. So, Lee, thanks so much for joining us. Let's start big picture. Let's start with Iger and Bob Iger with his return and what he's doing. I mean, he's made a lot of cost cuts and tried to, streamline Disney. What's your take on where Iger is with righting the ship, if you will?
Well, Iger was there when I was there, and then I've been retired for some time. And I heard a lot of things when Chapek was there, and I heard a lot of cheering when Bob came back. And I live 6 miles from Disney World, and so I get a lot of feedback about how excited people are to have him back. And he's got a special way of working. He knows the customers and the employees, the cast members know everything you need to know. And I think he's opened up the allowing the park executives to make decisions instead of being held back. So it's pretty positive. And so same old story. He creates the right culture, and people like him and they trust him, and he gets involved in a positive way. So it should be good.
But Lee, what comes after Iger? Because we saw the board extend his contract by another 2 years. It was also interesting to see Tom Staggs, Kevin Meyer, former Disney employees come back on as strategic advisors for some of the problems that Disney is going through, like trying to take ESPN fully over the top. What do you make of the leadership outlook moving forward for Disney? Because that has been a concern for investors.
Yeah, if we could guess what that's going to be, I would place the bets on it. But I don't know. I think, maybe it's going to be one of the guys he's bringing back, or that's a big challenge to Disney.
It's probably going to be one of the guys that he's bringing back. Like, let's just state the obvious. It's either Kevin Meyer or Staggs or both. Like, these guys one guy built up the Disney Plus. Kevin Meyer was the guy that did all the M&A and stuff for Lucasfilm's Marvel and started Disney Plus. And Staggs actually ran the entire, what is that thing called? Entire Parks and Resort division, actually built out Disney Shanghai for $5.5 billion and actually made it a very profitable business. So both of these guys are killers in their own right. And Disney doesn't need a CEO. They need co-CEOs like these guys right here. So let's keep going.
This has been for years, because Michael Eisner and then Bob stayed there for many years and didn't turn over like a lot of executives do these days. So they were steady and long term, and it's a different product. You know, we have Disney World is the only part of Disney and the parks that have real guests. The rest is all you know, movies and retail, and it takes some talent to be able to do all of that and to lead that effort. Bob set a good example, but I don't know what the plan will be to get him replaced. I guess that's why he got extended again for another few years, besides the 2 years he committed to. So I'm sure they're all busy trying to figure it out.
And I want to ask you about the parks in particular, especially when you think of just the cost in general and pressures that some consumers have, and you know what we're seeing with regard to consumer spending, and consumers have been spending on experiences. Is there any cause for concern about how much strength the parks will continue to have for Disney?
Yeah, I think the cost thing's always been an issue. Every year it's an issue for the last 25 years. I think that's on every product from any company that raises prices. There's a lot of attention to it. And of course, Disney is especially in the spotlight when they have a price hike. But I don't think the price will be an issue. They'll feature packages. They'll find ways. They just done a big annual pass holders program in Orlando, and the results were unbelievable. The number of people came back out and bought their annual passes. They're changing a lot of the rules to simplify the experience for guests. Now that I would say that Josh D'Amaro and Jeff Volley, who runs Disney World, have the authority to do that. So you're going to see a lot of changes coming, I think, in January with eliminating this reservation system, the meal plans coming back, which saves families money, reservation requirements, all of those kinds of things. You're going to see a lot of things going back to the way they were before Mr. Chapek was in place.
And Lee, what about Bob Iger's current battle with Florida Governor Ron DeSantis? Do you think that's had any impact on park attendance? Last time you were with us, you said CEOs cannot ride the fence on political issues anymore. Do you still stand by that?
Well, I think it's tricky. I mean, how do you I think Disney is doing the right thing. And I think, you know, if you lose the culture and you lose the trust of your employees, it's a lot even more slippery. Because what makes Disney World is the cast members. I mean, people will tell you, out of the thousands of people we hear from every year at Disney World, they always talk about how great the cast is, the employees, how well they treat them, the empathy. So, yeah, as we know, many companies are going through this right now. It's a tightrope, and I don't think that the DeSantis issue is going to be a big one. I think that will fade off into the sunset. Every kid, you know, I could go do a survey with children. I can't find any children who don't want to go to Disney World. So it's always the parents are the problem. Parents are always complaining. Kids are happy as a lark. Kids are happy if they just go to the water fountain. So, so far it's 100% kids want to go there. So we'll see how long this, and you know, I hate to say it, but all the reports, there's a lot of people that like to write bad things about things when things are not going well for a company. And so I would take all of this press with a grain of salt it's not the end of the world. And Disney's about to come up next year to start celebrating their 100th anniversary.
Well, that will indeed be big. And to your point about Disney, definitely the kids, because my son says his favorite vacation, well, it's a little bit of a tie for different reasons, but his best vacation, he said, was last year. We went to California. We went to Disneyland. There you go. I did like it better than I expected, because I've been to Disney World once before. It was overwhelming for me as a parent. So, yes.
Yeah. I have some questions for you, and I'll let you. Have you been to both parks in the U.S. or just the one?
I've just been to the one in Florida. I haven't been to Disneyland. I've been to Disney World.
And my question is, I've been to Disney World twice. I haven't been in quite some time. I think last time I went, I was like 7 or 8, but I remember going twice. My question to you is, being somebody that's been there in their 30s, I've heard multiple people that are adults go back, and they say it's absolutely still magical, even as you're adult. Obviously, it doesn't have the same impact as it would as if you were a child. But is it still something that is a magical place? Do you still feel that buzz when you walk in there? I know that you have some recent time there over the past few months, and you might be
So
going back probably tomorrow because of your wife. But
no, I've gone twice. Once my nephew from the UK had come. So earlier
Okay.
in the year we went because they loved, like, he loves Star Wars. He loves Star Wars to death. So that was like one of the things that we absolutely had to do. So I actually got a chance to go. We had a great time. It felt good, but it wasn't that great. It was like, okay, yeah, you know, like it was good.
what was off about it?
Well, you know what it was? It was probably my nephew is really, really young, and I was going with another family. So it was just me by myself. Like, I don't really like know them all that much or whatever. So it wasn't like, I mean, I know them, of course, they're my family, but it wasn't that
Satisfying.
I don't know. It wasn't that satisfying. But then I went with my brother and my niece, who I'm really close to. She loves Frozen, right? And I loved, like, the second time I went, it was a smaller group, and this time we actually had the Genie Pass, and so we were just having, you know, going from ride to ride, so it was really nice. It was a smaller crowd, but here's the part that really like set the bar kind of high. I don't know what it was about the Frozen like show that they had, but man, was it good. Like, there was a part of it where like Elsa comes out and singing that song, like Let It Go, and like there's actually like sprinkles of snow falling on your head. And I was like, ooh, like I was a fucking 38-year-old, be like, oh my God, you know, like, so there's definitely something magical about the place.
The little touches.
Bringing people out. The one thing I will tell you though, I saw more adults there than I saw kids. You want to know? That was a little weird. That was a little weird. That was a little weird. Yeah. But you know what it is? There's so many fans that grew up with Disney that like those are like the people that are in like high zone monetization. It was also like a school day, so maybe that was an impact also. You know, but there was a lot of adults, man. A lot of adults. So, by the way, do you know what Disney Lorcana is?
I don't.
Okay, so let me.
Is that something? Is that something that I thought they were trying to open up a third park in the middle of the country? Is that what you're talking about?
No. So this is like a trading card game. For, you know, like Pokemon cards, right? Yeah. It's kind of like that, but it's specifically like Disney characters. And I know that sounds like oh, why are you talking about that? But dude, right now, you know, like with Pokemon, like Charizard, right? Disney Lorcana hasn't even really come out yet they're selling for hundreds or thousands of dollars. Let me just show you real quick.
I know the official Disney NFTs did really well back in 2021. I don't know how they're doing now, but
yeah, like this specific card right here is like it's like supposed to be like really worth a lot. So there's like a lot of side businesses and side hustles that Disney can do because of such like content that they have. So let me just put it up. So it's like a trading card game right here. Can you see the screen?
Yeah, here and two.
Okay.
And when are these coming out?
Sometime next month, I think, or something. This month.
I'm gonna buy some of that shit.
So someone put in the chat, and it's actually kind of not a bad idea. They said just take a whole bunch of like packs today, just like buy them up, and then like bury them somewhere and like open that shit up in like 10, 15 years. It'll be a collector's item, man.
Well, that's the thing. You know? It's gonna be like all the Pokemon cards, right? Where
you
have the originals, and it's like you probably buy, hundreds of them for whatever price, and then they're going to come out with so many, different cards that eventually it's going to be, anyway.
Yeah. It's like I have 4X Disney Expo Mickey. I don't know what that means, but dude, all I know is I've been reading news reports and these things are going like hotcakes. Like people are just going absolutely nuts for this. So it's like Disney their IP is so fucking monetizable. That's the whole point, you know. So I would say if the House of the Mouse, as many people want to write it off, like, hey, they should just be sold to some, to some big tech company and they're gonna lose money. They're not losing money. They're growing their business. They're turning the ship around. They're spending less on content. The CEO that brought them to a really successful place is back. The lieutenants of that CEO who made the success happen, they're also back now. I don't really see too many downsides to Disney at this point. Like the pricing has come down for valuation so much that now it actually makes even more sense. I think this is one of those companies that's a generational opportunity because the monetization opportunities for their content is long tailed. It goes so far out, and they literally have so many levers, Matt, that they could just fucking pull at any time.
Well, that's the thing. I mean, think about how many times they've redone the Spider-Man movies. Think how many times they've redone the Hulk movie. Think about even if you have a lull of 5 to 10 years, they're going to restart those Marvel movies from scratch again. And not only that, but they also have all of the X-Men under one roof now. They have all the Fantastic Four under one roof now. So it's like you let some of these things kind of just sit for a few years. You let people kind of forget about them. And then you let a next generation, like I'll be the first one. If they make another Hulk movie, I'll be in there. If they I don't know how well they'll be able to do the Iron Man movies again, because I think Robert Downey Jr. was literally the perfect cast person for that. But if they do a good job with it, I'd be willing to give it a go. So, I mean, I still think that there's opportunities, and like you said, it's a 100-year company. There's been ebbs and flows. I don't think people give it enough credit. But here we are. And, I don't know if I would say generational. I would say it's probably something that you could think about for
blue chip. It's more blue chip.
Blue chip, swing trade. My thought process is, do you see this ever becoming a, $500 billion, $600 billion company? Or is it going to be something where it goes from the 130 to 160 billion range to 300, 350? You take
it'll get to 500 billion. That's just a matter of time, man. I think what it is when you look back and you look forward, it always feels like unachievable. Like I know that the first time a company hit $100 billion in 2005. No, the first time a company hit $1 trillion, everyone was ooh and eyeing. Remember, it's like, oh my God, $1 trillion. And now we've got multiple companies that are $1 trillion companies, right?
But what I meant, so I understand what you're saying. With inflation, a lot of companies are going to hit. There's so many companies that are worth 400, 500 billion now. When in 2000, when Exxon and Microsoft were doing it, everyone was freaking the hell out. But my question is are they going to hit 500 billion in a time period there where people are actually going to be like, oh shit, right? Competing with the likes of a Visa or an Exxon or something like that, where their market caps are really up there.
Well, I guess that's all going to depend on how much money they generate. Like how much revenue do you generate and how much of that is profit and how much of that profit then goes back to shareholders and back into their balance sheet. I think that's the real question. But I think Disney on a conservative level right now should be worth at a minimum of $130 based on today's operations, right? But that doesn't mean that the operations are going to stay the way they are. They're going to grow further up. Like, let's say right now, Disney Plus membership ends up hitting 200 million, right? Just the Disney Plus membership. And then you get another 200 million for this and 200 million for that. That's almost like 600 million. If you do like a bundle and it ends up hitting, let's say 400 million subscribers per month, right? Multiply that out by 12, multiply that by all the ARPU that's being generated as a service, plus all their parks and all that revenue. And it could, theoretically, they can open up more parks too, and as the world progresses, Disney has the ability to progress with it. That's the key that I love about the entertainment business. That as the world is starting to become more globalized, guys that like or companies that own content that can translate to other parts of the world will grow along with it. You know, think of Coca-Cola. Coca-Cola started in the United States, but then it became a global brand. Disney started in the United States, but now Disney is a global brand. And I think that's one of the things that people really underappreciate when it comes to Disney. It's that it's no longer just a US brand. I'm sure that there's kids in South America that are going to watch Disney
Yeah.
movies in the future, you know,
Well,
or
I wanted to end on that. You know, with all these sort of cultural things that are kind of going on with the organization, I don't want to dive deep into that. That's not what I'm here for. But my question is do you think it's prudent for Disney to stop only making movies in California? Do you think it's prudent for them to start small, you know, media companies that have the ability to kind of grow like a Bollywood, for example, so that they can have a specific brand that can kind of create, or like a sub brand they can kind of create within India? Same with South America. Maybe start one in Brazil, because Brazil is the most populous country there. Start one in Africa, Nigeria, South Africa. You know, some of the bigger countries that are there. Or do you think that would dilute the brand a little bit, kind of like what happened with Marvel by creating too many different opportunities in a short amount of time?
You know, they're gonna have to weigh that as executives and see what the total addressable market really is. Like, so as an example, they thought India would be a really good place to do business, that they really wanted to get in there. It's a growing, you know, middle class. You want to be in there. So they got the IPL rights, but they also realized that the IPL rights were costing them too much money. So sometimes it's actually a good idea not to go into certain markets at a certain price point and then expect to still be profitable, right? So you can have growth, but it can't be growth that's not ready for the growth yet. Do you know what I mean? Like, you can't invest in a market where there isn't a potential for you to make money. And I think that's one of those things that executives will have to figure out at Disney. You know, here's an example. Like, let's say you make certain characters that are homosexual. Well, that's really frowned upon in the Middle East. Like, if you're trying to sell Disney Plus to the Middle East and you have like a homosexual themed like cartoon, or you have a homosexual themed like show, the Middle East will just tell you, no, you're not allowed to be in our country. So that entire submarket is going to be completely unavailable to you, right? So that's where you as an executive have to say, you know what, the sensibilities of the planet and certain regions is a little bit different. So let me make sure that I try to apply a very neutral stance to it, and also, you know, live within the world. And so these are the, like I said, this is all stuff that the executives are going to have to do and make decisions on. I like the fact that they're going a little bit more multicultural when it comes to creating new characters, specifically for certain markets. Like, here's an example: Shang-Chi is very popular in China. Why? Because people wanted a Marvel character that represented what they look like. Black Panther, as you know, is probably like, you ask any single black person who their favorite superhero is, I guarantee 99.9% going to say, no, Black Panther.
Black Panther was
You know,
dope. It was dope.
you know,
And
so
my niece
yeah.
is that the like the last two or three, the Shang-Chi? I never watched it, but I think my nieces and nephews, I went to the Outer Banks with them 1 or 2 years ago, and I'm pretty certain that that's what they were watching. Did it come out like in the last 2 years or so?
With Shang-Chi came out, I think like 3 or 4 years ago, a little while
Okay.
ago. Yeah.
Okay.
Yeah. Yeah. And this other thing too, like with female leads, like don't don't just take an existing character and make a female version and be like, here you go. You know, like, create some really original, great content for a female superhero, man. And it can be done really well too, like with Wonder Woman. Like, Wonder Woman's great with Gal Gadot and stuff like that. So stop trying.
I'm not going to go to the movie theaters
Yeah.
and see Mandarella. Like, I'm not gonna.
Yeah.
It's not going to happen.
Yeah, you know, and same thing with by the way, it's not just Disney. So I think a lot of people give Disney a lot of crap for being like extra woke and like doing something. Dude, every single content publisher has flubbed on this. Okay. So I'll give you some examples. Like Warner Brothers. Warner Brothers had Batgirl. Terrible, terrible. So guess what they did? They just shelved that shit. They didn't let it come to the light of day, man. Loki, WandaVision, they were really good because those were characters that were specifically women. You can't stop taking characters that exist that are dudes and making them women, and stop it's just weird when they do that too, man. Like, create original characters so that people feel represented, not just, oh yeah, you know what, we're gonna use you as a token superhero. So it is what it is. That's just part of content creation, I suppose. So how can you buy Star Wars and ruin it? I'll be straight. Some of the content around Star Wars, like the last 3 movies, I did not enjoy at all. Okay, they really just, I don't know what they did to it, but it did not feel like Star Wars or the universe. And I wish that they would just say, you know what, fuck it, let's do another 3 movies, but this time we'll do it the way that it's supposed to be done. And that could be a 3 new movie set. That would be so cool, right? A remake of the last 3. Just be like, oh yeah, the last 3 movies, they were hallucination. They were in another dimension. This is the real canon again. That wouldn't be so freaking cool, man.
So
Yeah,
they never ended up releasing episode 10, which is good, right? I think that they were originally going to go like right into it, but they did take a break.
Yeah. I don't know. I don't know what
I don't really think.
Yeah.
I don't even think I saw Han Solo movie. I think I saw Rogue One. The first one was really good.
Yeah.
The last, like, episode 7, 8, and 9, I thought were really good.
Rogue One was my favorite, man. Rogue One, out of all the Disney movies that came out lately, was my favorite. Like,
I really like
the whole scene, especially the one where Darth Vader like gets on the ship.
Oh my god, bro!
That was
I was
amazing.
literally freaking out. I was literally like, oh, that you're talking about the one where he's literally in the dark and the fucking red.
Let me pull it up real quick.
Dude, it's insane. I remember looking at my brother. And we both were just like literally jumping in our seat. We were freaking out, dude. It was such a good movie.
Hold on one second. Let me just pull it up. This was like by far one of the best scenes in recent time when it came to. All right, here we go. Like, this is what Star Wars is supposed to be, man. Sorry, Matt. This video just got demonetized.
That's fine, dude. It's worth it.
Yeah. Oh, dude. The fucking sheer terror on these guys.
This part's so good.
Yeah. It's like, oh. That fucking sound, man. Ugh. He's like, y'all are fucked. It's like, boom, boom, boom.
Dude, in the theaters, everybody was this. Dude.
Yeah. Oh, dude. Like, freaking badass, dude.
Oh, man.
Yo, shout out to this one dude who passed the shit through the door, man.
Right?
He saved the universe. Like,
that scene in theaters was just absolutely absurd.
Yeah, man.
But dude, I mean, I've seen so many great movies from Disney over the years that literally like put me in emotions like that. Like, it's some crazy crap.
Yeah.
Anyway,
there's one more scene that I just want to show. This was also another favorite of mine. And it was the same movie, man. I don't know who made Rogue One, but it was.
My lord, Director Krennic has arrived.
Badass, man.
that is a good movie.
Let me just forward it a little bit. Imagine, dude, I used to have a boss who was like fucking Vader, man. Every time this guy would walk around, I swear it was like, actually it was a she would say very little, but when she came around, she could fucking cut you, you know?
Yeah.
So, oh man.
Yeah, man, Rogue One gave me a lot of...
Yeah.
Director Krennic. Lord Vader. You seem unsettled.
No, just pressed for time. There's a great many things to attend to.
My apologies. You do have a great many things to explain.
I delivered the weapon the Emperor requested. I deserve an audience to make certain that he understands its remarkable potential.
Its power to create problems has certainly been confirmed. A city destroyed. An Imperial facility openly attacked.
It was Governor Tarkin that suggested the test.
You were not summoned here to grovel, Director Krennic.
No, it's...
There is no Death Star. The Senate has been informed that Jeddah was destroyed in a mining disaster.
Yes, my lord.
I expect you not to rest until you can assure the Emperor that Galen Erso has not compromised this weapon in any way.
Yep. This part is like my favorite.
So I'm still in command? You'll speak to the Emperor.
It's like, oh, you just fucked up, dude. Oh man.
Be careful
not to choke on your
aspirations, Director.
Like, how could you not love that villain, man? Amazing. You remember in The Empire Strike Back, where Lando Calrissian, it's like, Vader, that wasn't part of the deal. His fucking response was epic. He's like, yeah, it wasn't. Pray I don't change it any further. You know what I'm talking about? The one where he was in what do you call it? Lando betrays Han and the team, and
Right.
so Vader is like, no, he's good. They're coming with us, and what do you call it? Lando Calrissian is like, no, like that's not what we agreed to, right? That's not part of those are not the terms, right? And then Vader's like, no, these are the new terms. Pray I don't alter the terms any further.
Right.
Calrissian's like, yeah, okay.
Whatever you say, man. I'm curious, man, why, like, because Rogue One, man, it hit it out of the park. I'm like trying to understand why.
It's the villain. It's the strong villain, dude. You need a great, like, think of even Thanos. Remember Thanos? Like, if you don't have a good villain, the actors, like the main, don't make any. Look at Kylo Ren. Kylo Ren was a fucking crybaby who was like, oh, mommy doesn't love me. Mommy doesn't love me. And my uncle, like, come on, guy.
I
My
was
dad-
rather disappointed
Yeah.
in
Then he kills
Adam Driver for that.
And I mean, dude, it's not Adam Driver's fault. Adam Driver's a really good actor. They just
Yeah,
wrote
I
the
do.
part to make him like a whiny little, like a biatch. I'm
You think so?
sorry.
I mean, I like Adam Driver too, but do you really see him
Yeah.
as a Kylo? Like, do you think that if Kylo Ren was casted as a different actor, it could have had the same effect
Dude.
as Darth Vader?
Okay. I don't know about that particularly. I think Kylo Ren could have been written a little bit better. The problem that I thought was, dude, you had this whole thing with Snoke, right? And then they just killed the dude off. Like, oh, Snoke was a nobody.
Right.
What the hell?
I know what you mean.
What the hell happened? And then you brought back Palpatine? It's like, bro, we all saw Palpatine fucking go down the tube, man. Palpatine's done. Leave Palpatine alone. And then, like, guess what? Rey is Palpatine's daughter. It's like, bro, you did that shit with Luke and with Anakin already. Stop trying to bring that same shit back again. Like, come on. I don't know. Kyle Ren. Yeah.
Anyway.
All right, man. This was
great
fun.
stream.
It was a good time.
Yeah, great stream. I
Good time.
appreciate you carrying us through it. And to be
Yeah.
very frank, I mean, I've been thinking because after the decline of Disney, one of the things I've never really done is sit and take an opportunity. I've looked at the subscriber number growth for ESPN and ESPN Plus and some of the other direct to consumer products, and I didn't really think I was seeing it kind of stall out, knowing that it's at 150 million subscribers across all the products. And I didn't really get that insight around the Hulu piece and a few other opportunities where, we're going to continue to grow. So might be an opportunity. I don't know if I should just sell what I have and buy calls, but I think the problem with buying calls here, and then we'll end it on this, is it might take a few years for this to truly get to a place where you'll be able to realize the value. And so if I were to buy calls, I would wait until the December 25s come out, which they might have at this point.
They already have come out. The 2025s are out. It's the ones that are in September, the 2026 Januaries that are probably going to be the most trafficked, and probably the ones with the best liquidity. So I'd probably wait. I don't think there's any rush into getting in and out. And I think if it does go down a little bit, it might be something to consider. But this is one of those things that, like, I hope people understood on this stream, even though it was a really long stream, it was almost freaking 2-hour stream, that this is what it takes to do research on companies, right? Where you really dig deep and you actually analyze the numbers, you analyze the balance sheet and all that. And I didn't even do a full analysis. There's still more that I have that I didn't exactly bring up, so spent too much time on terrible content. I hope he wasn't talking to us. I think he was talking about Disney, hopefully.
Oh, yeah. No, they're definitely talking about us. No, I would say the reception of what we do here with the deeper due diligence and that you put in and then I put in, I know we kind of go back and forth, but I think it's well received by the people that do watch, and I get a lot of good commentary in the background. But I'm actually surprised that these aren't a little bit more. Because basically break even of 100 to 107 in December, was December 2025. 800 some days away.
Yeah, but that's because, like, it's been written off by a lot of people. So right now the pricing is somewhat cheap. I wouldn't even call it cheap. I'd just say the level of optimism is not there. But as people dig in, maybe they'll find something different. Who knows?
I mean, you think about it, the run to $200 a share was rather unexpected. And if you think about the possibility, I don't think it's out of the realm for it to kind of do that big pop again, especially if you start hitting profitability on the Disney Plus side or the direct-to-consumer side. Because exactly what you said, if they start getting $7 billion a quarter with a 20% margin or something like that, you end up making a lot of money. And so if they do see that and people start to get that in their heads and recognize that, hey, we're here for good, and we're coming for Netflix's launch, it could see a $200 pop. And if that's the case, you buy these 100, 105s, you turn this $13 into, $90
my thing is, remember, this was a dividend aristocrat. If they bring the dividend back, I'm sure that there's a set of buyers that are like, wait a second, this is a cash flow machine. I know I have a secure dividend with this company, right? The effects of COVID are over. Let me buy into this so I get the ability to reset all my dividends back to where they were.
That's
right?
originally why I bought into the company, actually, back in 16 or 17. Yeah.
Let's just look at dividend history from Disney, because this is the thing that it's really worth taking a look at. Share.
It went from being a January payment, a once a year payment, to then being a semi-annual, and that's when I started investing in the semi-annual payment. And it looked like previously it was as a quarterly payment, but I guess they went to an annual payment. I don't understand that, but okay.
Yeah. So you can see here's the solid dividend payer for like years. Okay, they never missed their dividends. I think maybe 1 year or two they might have skipped it, like during a really bad recession or not. But ever since then they paying dividend. So once again, something to consider. They were doing.
I wouldn't hate it, man. I mean, it wouldn't be a lot. I have 53 shares. They bring it back.
Yeah.
Let's say I don't think they go directly back to where it was, but it's $100 a year. Yeah, I'd be getting. So,
yep,
cool. All right, my friend. Thank you once again.
Always a pleasure. Later.
Yeah, my friend. See you guys later.
Take care.